Let's get ready to rumble. What's up, guys? It's Mr. Fit to Flourish. Welcome to the Fit to Flourish podcast. We've been talking a lot in this trading series and this masterclass on how to trade, how to get into trades, how to chart indicators. And the last video was about indicators and charting platforms. So we're going to get right into that. So I want to kind of recap that and show hands-on how you would do that. So I'm going to share my screen now on SPY. And we're going to be looking at SPY on the 5-minute time frame. So this is SPY, the S&P 500 ETF, which is an exchange traded fund, which holds a basket of the largest 500 stocks in the stock market, okay, in the New York Stock Exchange. So on the 5-minute time frame, this is TradingView. So this platform is TradingView, and we're on the 5-minute time frame. So each bar captures 5 minutes of time, okay, 5 minutes of time. And one thing, let me just make sure here. All right, vertical. So where I made this vertical line, that's pretty much where the day starts. So today is May 14th. So this is where the day starts. So this is 9 a.m. This is the first 5-minute candle. I'm going to make this bigger so you can see. This is the first 5-minute candle. We talked about uptrends and downtrends. As you can kind of see here, we're kind of just going sideways. But if we're looking at trends, you can tell what kind of a trend we are by drawing by drawing a line. So here, this would be a downtrend, and then technically on this side, it looks like we're starting to go into an uptrend, and then we go back to a downtrend here, and then an uptrend here. So we're just kind of identifying trends there, just identifying trends. Okay. So that's one thing. But then another thing that we can do is we can talk a little bit about some of these indicators that we mentioned earlier. So to download indicators, you go over here to indicators on the TradingView tab. And then like I said, I recommend the EMAs, which is the exponential moving averages. So those are these lines. And they basically give you the average price. And price likes to come back to these average prices, cross below them, cross above them, but they can give you a lot of information about what's going on the charts. So let me take quite a bit of these off to not confuse anybody. So I'm going to take all of these off except the 20 EMA, which is the yellow line. So as you can see, the yellow line follows these bars pretty nicely, and what it's doing is it's calculating the last 20 bars, the average price of the last 20 bars. So that gives you a good estimate of, hey, what was the last 20 prices? Typically, if you see it trading below, it's going to stay below for a little bit. And then once it crosses above, it starts to trade above the line for quite a bit. And then it's going to end up coming back down because price likes to sort of retreat back to the average. So it's mean reversion will come back to the average price. Okay. Now, the other indicator that I talked about on the last portion of our learning was the Saudi ATR levels. So what is the ATR? So the ATR is an average true range. An average true range just tells you pretty much the average that a stock will move up or down. So based on SPY here, it looks like at 520.91 is where SPY closed yesterday. So this gray line shows you the previous day's close, 520.91. And then above the blue line would be areas where if we get above this here, we're probably going to continue to fly. There's enough volume to push price up. Okay, so 522 to 520, that tells me that there's an average range of about $1.50 that SPY moves. And then that's to the upside, and then this is the downside. This yellow line shows if we get below this yellow line, and we'll probably continue to sell off. There'll be enough selling pressure to move us to the downside. Once we get to the last gray line here, that pretty much says, hey, that's the 100% move. If we get to this level, price is going to start to come back up. So it's telling us that the average true range, the largest movement the stock will make down potentially is to 515. And that is the largest, absolute largest move that the stock will make down. So it's good. It's a really good indicator for showing us the maximum moves or the average moves that a stock makes on a day-to-day basis. Another indicator that you might want to look into that's pretty similar is called the ADR, so the average daily range. So ADR. ADRs give us good information about the average move that a stock will make as well. And typically you want to trade stocks that have large volume and then that are pretty volatile, meaning they move up and down pretty dramatically, because you can make more money that way. If a stock moves up or down more, then you can capture more money when you're trading derivatives, aka options. So that's just a short little video on, hey, what are the two indicators I use? I typically use the EMA, and then I use the ATRs, the average true ranges. One last indicator actually that I used that I mentioned as well was the anchored volume weighted average price. So that's AVWAP. And what is AVWAP? So AVWAP is basically the anchored volume weighted average price. So it gives you the average price in relation to the volume. So the volume being the amount of people trading. So typically when you get above, again, that means that there's enough volume to support the price being up, price going up. If you start trading below, then there's not enough volume to keep the price moving up, and typically price continues to the downside like it does here when we cross this pink line. Now, the way I trade is I like to wait for the pink line to go below the yellow, because then that tells me that not only is the average price and the volume like falling, but now it's below the last 20 bars, which gives me a good indicator that volume is so low and the average price currently is so low and it's not being supported that it's less than the average of the last 20 bars. That gives me a good indicator that in the current moment of trading, I would be ill-advised to trade up. So I want to be buying puts or going short. So anything that would make me money going with the price going down. But if we cross up, so if the pink line is above the yellow line, then I look for longs. And as you can see, that is sufficient to go long here. So remember, going long means that I'm buying. Okay. But yeah, that is all I had for you guys today. Thank you for tuning in to the Fit to Flourish podcast. Yeah, stay tuned for more gas, more learning on how to trade. And we're going to learn a lot. We're going to make trading easy. None of the ICT, SMC, order block, blah, blah, blah. Prices go up or they go down. That's the only way they can go. And then you use some of these simple indicators to pick a direction. You develop evidence to show you that price is going to be going in that direction. You make a move, you define your risk, you're good to go. You guys have a great day. This is not financial advice. Thank you for tuning into the Fit to Flourish podcast. I'm out. Peace.